Hey traders, Raghee here, and I want to talk specifically to my day traders out there, traders who are realizing that right now is the time to put your investment hat sort of on the shelf and focus on being a trader right now. Don't worry about what's happening to your portfolio. Look at what you can do to stay active as a trader during these volatile times. And one of the most volatile events you can get is the limit move. And so I'm going to walk you through what we did in the chat room today. And what we do is we call these out in real time and make these setups as process driven as possible. We don't want to be sort of making it up as we go along because that's completely and utterly unrepeatable. So what are we looking for? And I'm going to point out some of these things on this chart so that the next time we have a limit move down or up, you can think about this process and try this on your own. So a few things. As soon as the market reopens today, clearly because this was a limit move before the bell, 9:30 the bell rings, and what I want you to keep an eye on is the first 60 to 180 seconds. In other words, the first 1 to 3 minutes. What you will notice is that your momentum or your scalpers, your momentum players, your scalpers are going to look to buy as soon as the market opens after a limit down move. You'll see that the limit move is going to be faded in the opposite direction of the limit. So in this case, limit down, buy orders. Now we don't know where the low is because sometimes it's like elastic, right? It kind of stretches a little bit lower and then it might snap back up. We don't know, and I'm not going to guess. So what we'll do is we'll let the first 60 seconds go by and we'll get the 60-second high. And you'll notice a lot of times the initial push of momentum is going to be from the momentum scalpers, the first 60-second high. As soon as we trade above that, you'll see another big push. And you can see that right here. Boom, boom, higher, okay? By the third minute, you'll be left with another high. And if we take that high out, so we look at 9:30 to 9:31 and then 9:30 to 9:33, okay? The first 60 to 180 seconds, boom, there'll be another push. Now, you can engage that. I typically do not, but what that allows me to gauge is the fact that within the first 3 minutes, maybe about 5, we're going to have a high to low range. And what I'm looking for is where the V score, this is a Z score of the VWAP. This is something that many, many moons ago, I played around with something like a Z score and said, hey, can I have a Z score on a stochastic? Can I have a Z score on an MACD? Can I have a Z score on a VWAP? And I settled on the VWAP because there are so very few tools out there that measure volume instead of price. They prioritize volume. And I thought, perfect. And this is, I've been using some version of this that I would manually calculate every single day for, gosh, almost a decade. So now we have it laid up on the chart, and I can do this on a 1-minute time frame, which I was never able to do before. Okay, so fast forward to not just one hit here, because I didn't know we were going to stop there. So we let the market establish the range. That means I've got a range here, and I've got a range here. Okay, the second time, you can even count this or this, okay? The second time we get down there, now I know what the range is like. So here's that test the high, that's that test the low. Now remember, I'm not interested in looking at the highs to sell. I'm looking at the lows to buy because of the limit move down. So that's exactly what we did. Second test, we look for the long position. As the market comes down to test the -1 of the V score, we look to buy SPY calls. And that's something that I've been pretty adamant about with the kind of volatility that we're seeing. Now, the bigger picture, and we're going to talk a lot more about things like halfback and swing lows, of which we had the 2447 and 2350. 2447 was our halfback. 2350 was the swing low, or as I called it today in the chat room, the release to Kraken level, at which we would probably really accelerate to the downside. But ultimately what we did is we looked for exhaustion up in this area, and we looked to buy puts, and that was really the primary position I wanted because, as many of you know, I focus on the yen for my bigger direction plays. But remember, limit downs will supplant that typical yen bias. I'll be looking for a quick fade of the gap down, or in this case, the limit down, and then we look for it to carry us higher to, in this case, our halfback zone, and then we look to build a short position. All right, and that's pretty much what we had. So think about the way in which limits and these moves are going to affect your typical plan. And remember, these limit moves, their intensity will supplant most types of techniques and tactics. So prioritize that, fade it typically, and I will see you in the next update.